UUU, looking at that big 9% pop on November 25th.
And the report gets straight to it. It correctly identifies the two main drivers.
Right. You've got the big one, the Linus rare earths production shortfall, and then the ongoing strength in the whole uranium sector.
Exactly. It nails the what. My first point, though, is that the presentation of those catalysts could be strengthened by really clarifying let's say, the hierarchical relationship between them.
The hierarchy, so you mean the difference between the specific event, the Linus news, and the broader trend?
Precisely. The weakness I see is that by listing them sequentially, it sort of risks diminishing the real stock-moving power of the Linus news.
Because that was the actual spark.
That was the spark. It caused the capital rotation on that specific day. The uranium trend, well, that's just the supportive foundation. It's why UUU was in a strong position in the first place, but it's not why it jumped 9% on a Tuesday.
That makes sense. And that Linus news was powerful enough to just completely overwhelm some other signals, wasn't it?
It was. I mean, think about it. It completely defied the insider selling from Tim Carson's just a few days before.
The EVP selling, yeah, about 100,000 shares.
Right. So when a catalyst can brush that off, it tells you it's the primary driver. Putting it on the same level as the sector trend, well, it dilutes that urgency.
Okay, but isn't there a risk of focusing too much on the Linus news? I mean, the whole long-term thesis for UUU is that it's this double thread in both uranium and rare earths. That depends on the uranium bull market staying intact, right?
That's a great point. And it's not about diminishing the uranium trend. Not at all. The suggestion is just to resequence it, frame the story better.
So how would that look?
You establish the uranium bull market as the persistent tailwind. That's the context. It's why UUU had a strong valuation to begin with. Then you introduce the competitor stumble, the power outage at Kalgoorlie. That's the unique immediate propellant. That news didn't just help the sector, it instantly increased the value of UUU's own assets, like the White Mesa Mill.
So the market was paying a premium for that specific, unexpected event.
Exactly. And the report should reflect that. For a concrete example, I'd restructure the why section.
Okay.
Read with the general sector strength, set the stage, then create a really robust subsection called, the major catalyst or the supply shock.
I like that.
And in there, you emphasize how this unexpected tightening of non-Chinese supply chain elevates UUU's position. You directly link the severity of the Linus news to the scale of that 9% surge. It moves from just listing facts to building a real cause and effect narrative.
That's a much sharper way to frame it. It answers not just what happened, but why the reaction was so aggressive.
Precisely. Now, let's shift from the external drivers to the company's internal health.
All right, and I have to say, the Q3 2025 financial snapshot in the report is laid out really well. You've got impressive liquidity, $94 million in cash?
And that huge working capital buffer, almost $300 million.
Right, and a much smaller net loss, down to about $17 million.
The numbers are all there, and they're strong. But here's the next point. To provide a more robust risk assessment, the report needs to better integrate the inherent financial tension between that strong balance sheet and the ongoing net loss.
I see what you mean. The report does a good job with the external risks. The standard bear case about rare earth prices or China export bans.
It does, but it fails to connect that internal tension, the cash burn versus the liquidity, to the execution risk. And that's critical.
Especially since they're trying to scale out from a pilot program to, over 1,000 tons of NdPr oxide a year by 2026?
That's the whole ballgame. It's not just about prices anymore. It's about pure operational execution. The weakness here is treating the liquidity and the loss as two separate data points, instead of two opposing forces that define the company's timeline.
So the suggestion is to link them explicitly?
Yes. You have to explicitly link that robust liquidity to their ability to sustain the net loss while they execute the scale-up. The cash is their runway. The net loss is how fast the plane is burning fuel.
But couldn't you argue the cash is the main story? I mean, in a capital-intensive sector like this, having nearly $300 million in working capital is a huge vote of confidence.
It is a massive strength, but its purpose has to be defined. The suggestion is to use the net loss figure to frame the primary internal execution risk. The narrative needs to shift from just, we have a lot of cash, to, we have this cash for the purpose of funding this aggressive 2026 timeline.
Okay, so give me a concrete example of how to phrase that.
You could amend the analysis section. Highlight that the $298 million in working capital acts as let's say a multi-quarter safety net against that $16.7 million quarterly loss. That gives them a real quantifiable window to operate without dilution.
And then you tie that directly into the bear case.
You got it. The revised bear case should say something like, while external factors are important, the primary internal risk is execution failure in scaling NdPr production. If the 2026 goals are missed, that cash buffer will deplete quickly, forcing a reassessment of the stock's premium valuation.
So the current valuation is basically pricing in flawless execution.
That's the key takeaway. It forces the reader to track the operational milestones, not just the commodity prices.
It's a much more complete picture of the risk.
All right, let's move to our final point, which is about the immediate trading thesis.
Okay, the section on statistics and valuation. It notes the high short interest, around 16%.
And it identifies that crucial technical range. If the stock breaks above 1450 to 15, it could trigger a short squeeze.
Which is a very specific, very actionable piece of information.
It is, but the report really underutilizes this insight. It's relegated to a statistical note instead of being integrated into the core trading thesis.
So it's buried.
It's buried. This is arguably the most short-term, actionable detail in the whole document, and it's stuck in the valuation data. The current actionable summary is all about the long-term fundamental story.
The golden ticket scenario, right? Successful execution while Linus is struggling.
Right. It completely misses the potential for a technical explosion in the near term. We need to elevate that short squeeze discussion.
Treat it as a force multiplier.
Exactly. It's a technical trigger that could dramatically accelerate the fundamentally driven rally. The Linus news provides the reason for the rally, but the short interest provides the fuel for an explosive move.
So if the stock is already moving up on the Linus news, watching the volume around that 1450 level becomes the most important short-term trade.
It's the whole game in the short term. The suggestion is to restructure the actionable summary to prioritize that technical hurdle. You have to explicitly link the fundamental catalyst to the technical setup.
Show how one feeds the other.
You have to. Think about that $14.50 to $15 range. That's likely where a lot of stop losses and margin calls for those short sellers are sitting. We should spell that out for the reader.
A concrete example?
You restructure the actionable summary to lead with something like this. The most immediate opportunity lies in the technical trigger. Monitor the volume needed to push UUU past the $14.50 to $15 threshold. Breaching this range, supported by the Linus news, would likely force short sellers to cover their 16% position, potentially causing a much faster rally toward the analyst target of $26.75 than fundamentals alone would suggest.
That's powerful. It gives the reader a clear, immediate tactical trade to watch for alongside the bigger investment thesis.
It connects the dots for them.
This has been a really thorough look at this UUU report. Maximizing its impact seems to be the key theme. So a quick recap of the three main points. First, refine the hierarchy of the catalysts. Position the Linus news as the immediate propellant and the uranium trend as the supportive foundation.
Second, integrate that internal financial conflict. Use the net loss versus the huge liquidity to create a much more sophisticated picture of the execution risk tied to their 2026 scale-up.
And finally, bring that short squeeze potential front and center. Move it from a statistic to a critical, immediate part of the trading thesis, highlighting that $14.50 to $15 trigger.
That's it. If these changes are made, the report's structure and its actionable nature will be so much stronger. It will give readers a clearer, more impactful roadmap for what's happening with UUU.
We definitely encourage you to integrate these points and send the revised analysis back to us for a follow-up. Until then, keep refining your work.